Hey everyone, and thank you for tuning in for another video. So today's video is going to be a financial and savings question and answer style video. So I used to do these on my channel quite a lot, about a year ago I'd say, and then I've kind of just stopped doing them completely. I don't really know why. I think it's because the beginning of this year I was trying to cover a different financial topic in full detail every single week on my channel, and I haven't done a financial video in quite some time, so I do apologise for that. But the reason for that is just because I've done so many financial videos on my channel that I don't want to create meaningless content, and when I do put a video forward I really want it to be informative, and I feel like I've covered so many topics already, be it mortgages, how to save, debts, credit cards, how to clear debt, loads of different topics. So if that's the sort of thing that you're interested in, check my playlists, and there's a financial playlist in there for you to check out. So anyway, on to today's video. So I asked you over on my Instagram to ask me any questions you like regarding savings or finances basically that you want me to answer for you. So today's just going to be like a chill video, just going to run through some questions. I have so many questions. I'll try and get through as many as I possibly can, but don't worry, if I haven't answered your question, I'll do follow-up videos in the future and you can ask me again, or I'll save the questions on my phone and I'll try and go over them for you in the next videos. So let's get straight on into it. P.S. before we get into it, if I do touch my hair, I do apologise. I never have it down anymore, so when I do I'm like constantly touching it. So the first question I want to cover is, where did you learn all your financial information from? So I am qualified as a financial advisor. My job role is called a technical paraplanner, so I do all the research, reports and analysis for the financial advisor because I don't feel ready to sit in front of clients basically. But yeah, I'm a qualified financial advisor. I've done over 10 exams in the industry and they are Chartered Insurance Institute exams. So I've done exams on investments, pensions, taxation, investment bonds, ISAs, retirement, pre-retirement, loads and loads of different topics. So a question I've been asked so many times is how much to save for a house, or what sort of deposit do you need for a house? So that's basically the same sort of question. So the amount you need to save for a house is completely dependent on you as an individual. So there's no set figure at all as to what you need to save. So first you need to look in your area and see the sort of house that you are interested in buying. So be realistic, you know, if you're a single person or you're with a partner but you've got a relatively low income, try and aim for a reasonable sized property. You might be wanting to look at a flat, you might want to look at, say, a 2-bed semi-detached house. Obviously where you live will determine the price as well. If you live in Essex or London, the prices are very high, so I was only able to afford a 1-bed flat, but if you live up north it might be a lot cheaper. So anyway, have a look on the likes of Rightmove, Zoopla, or any new build developments if you're interested in a new build, and find out the sort of price for the sort of house you're looking to get. So that kind of gives you your starting point. And then what you need to do is you need to go onto a mortgage calculator online. So all you simply need to do is type in mortgage calculator. A lot of banks have these, so I'm not going to recommend any specific bank, but you can type in your specific bank name and then mortgage calculator. Now, by the way, if I'm funny with not disclosing things like that, it's because I'm not allowed, because of my job, I'm not allowed to make any specific recommendations as to providers or specific products, just in case you're wondering why I'm not being completely definite in my answer. So anyway, so yes, type in a bank, whatever your bank name is, and then mortgage calculator. Most of them will have calculators online, or you can just type in mortgage calculator online. Then all you need to simply input is your income, your expenditure, your partner's income, expenditure if you have a partner you're looking to buy with, and then this will determine how much you're allowed to borrow. So I'm going to give real random figures here. Let's say it's telling you that you can borrow £150,000 and you've gone online and you found a house for, say, 200 grand. You know you're going to need a £50,000 deposit, and then at that point you might think, actually 50 grand is quite unrealistic at this stage, it's not really going to happen for me. You can then revise down what you're looking to spend. So you might think, okay, we're going to look to save £30,000 and our house budget is going to be £180,000. Do you see where I'm coming from? So when I was looking for a house, I kind of figured out roughly what I could borrow, and then I had a target in mind of about 20 grand to save. So mine kind of was just like a constant changing thing, I guess. I wasn't really set on anything. I just in my head thought, right, around 20 grand and I'll see what I can borrow at the time, because I was going through exams at work, so I was earning a lot more at the end of my savings than the beginning, so I could have borrowed more at the end, if that makes sense. So my kind of borrowing capacity increased, and then the house value I could buy also increased. So you have to kind of look at your starting point as a worst case scenario, and then throughout your savings journey, try really hard at work as well. Try and increase your borrowing if you want to borrow a little bit more to get a bigger house. And in terms of the percentage of deposit you need, it totally depends on what you're doing. So if you're looking for the Help to Buy equity loan, you just need a 5% deposit. If you're looking to just go to a lender, some lenders just require as little as a 5% deposit, but this isn't the standard, if you like. Often lenders like to have a 10% deposit, and in some cases a 20% deposit as well. And again, it just depends on the lender you go with. This is the sort of thing a mortgage advisor can help you with. So you might want to go online and search for a mortgage advisor local to you, just to figure out what's best for your particular circumstance. So there's no one size fits all answer here. It is totally down to you as an individual and your income. So the next question is, what can you do to build a good credit score at the age of 18? So when you turn 18, you haven't built up a healthy credit score because you haven't had any debt as such. So to build up a good credit score which will enable you to get more debt, I know that sounds a bit weird, but for example, when you want to get a mortgage, if you haven't ever had debt before and you haven't proven that you can pay that debt back, you may struggle getting a mortgage. So things such as getting a credit card and then paying that back every single month, that's a great thing to do. So for example, if you know every single month you spend £100 on petrol or diesel, you could get yourself a credit card and then just put your petrol or diesel on that card every single month and pay it back. So don't spend money you wouldn't have normally spent on this card, just use it for your standard outgoings and then ensure you pay it back before the deadline each month. And that's going to show lenders that you are able to use a little bit of debt and pay it back straight away in a timely manner within the timescales that you have to pay it back. So that's a really good thing to do. Of course, things like a phone contract, if you have car finance, even car insurance, if you pay monthly, that is actually a form of finance as well, because you're effectively financing the payment over the insurance year. So that is basically ways that you can increase your credit score and get a good credit profile at a young age. How to tell my friends I'm trying to save without it impacting nights out. So I totally understand this, I feel this, and I know what it's like. So it literally is as simple as you're telling your friends you want to save, and they should just respect that and understand. And if they don't, I don't think they're the best of friends. I know it's difficult, but I think true friends who care about you and want you to succeed in life will be proud of you and happy for you. However, saying that, when you are younger, friends might not understand because they might not be at the same stage in life as you, and that's absolutely fine. I started saving for my first place when I was around 19, 20. So some people might not start saving until they're 25, until they're 27, whatever age it might be. So you might be younger and you're determined and want to proceed at a young age, and they're not ready, and that's fine too. And you have to kind of respect each other's positions, you know, respect that they're not interested, but they kind of have to respect that that's what you want to achieve. But in terms of not letting it impact nights out, it literally is a case of pre-drinking, for example. So say to your friends, look, I'm really trying to save really hard, I want to be good with my money, but I still want to enjoy my time with you. Can we please go round one of our houses before a night out, each bring a bottle and have some pre-drinks, and then when you go out you haven't got to spend loads of money. And if they still want to spend loads of money, they can do that, but you don't need to, because you've had your couple of drinks before you go out. And in terms of going to clubs, hopefully it's not too expensive to get into the clubs, but you could potentially arrive a little bit early. I know it's a bit dead if you arrive early, but you could arrive say before 10, before you have to start paying that fee to get in, and that will just help you save that little bit more money as well. In terms of getting home, maybe see if you can arrange a lift with someone, or if you are getting a cab home, try and all get in the cab if you can, and maybe have a sleepover after, so that you're splitting that cost and reducing what you spend. Is it better to save or overpay a mortgage if I'm looking to move? So this is quite an interesting question, and there's no real right or wrong answer, so I'm just going to say what I personally would do. So for example, with me and Jordan, we are looking to sell his house soon and then move. So in our circumstance, any money we have, we are saving, because we don't see the point in putting money into a property when it's going to be listed on the market and we're going to sell it soon. So it doesn't really matter, because if you put money into the property, effectively you're overpaying your mortgage and you're reducing the mortgage debt you have, and then you're reducing the interest you pay. So if it's over a long period of time, if say 5-10 years, the impact of overpaying your mortgage versus saving could be quite drastic, especially if you're just saving in a cash account such as your bank account or a cash ISA. As we all know, interest rates are really low, so interest rates on a savings account are much lower than the interest on your mortgage. So overpaying your mortgage, of course, is better than putting it into a bank account, in the sense of not making money, but saving money, because you're obviously saving the money on the interest you would have paid, if that makes any sense, because you'll be saving a little bit of interest by overpaying your mortgage. But if you're looking to sell your house soon, there's not going to be a massive impact, because the amount of interest you're going to be saving by overpaying it is going to be minimal. Yes, technically on paper it would look better to overpay the mortgage, but I feel that if you're looking to move, it's always good to have funds in the bank, just to make sure you're safe, just to make sure you've got emergency funds and savings behind you. So that's just my take on it, but everyone will have a different opinion on that, but that's just my personal take. Does financing items affect your credit score? Yes, it does. It might not have a huge negative effect though. So if you're taking out something and you're paying it back each month and it's not a huge debt, for example, you might take out a phone contract, that might not have a huge impact on your credit score, but it is going to have an impact. So it's just something to be wary of. You know, you don't want to take out too many things on finance close together as well, because it's looking like you're just getting debt after debt after debt. But if you take out a new financial agreement, say every 6 months to a year, and you're paying it back and you're settling that debt and you're getting a new debt out, then it doesn't impact your score too badly. I've had loads of cars on finance, loads of phone contracts. I've bought things like laptops and cameras and then paid them off after 6 months, and my credit score hasn't been really badly impacted by this, but it's because I've been really sensible. I've never missed a payment. If anything, I've paid quicker and made sure that payment was cleared before it needed to be cleared. So just be careful with it. Don't get too many things on finance in a really short space. And remember, the more you get on finance will impact what you can borrow as well for a mortgage. How much do you think is good to save for furniture and electrical items for a first home? So again, I feel like I keep saying it depends, but it does depend on what you want. So if you're someone that doesn't mind getting secondhand things, you really don't need a lot of money at all. You could look on Facebook sales and you can buy so many beautiful things on Facebook sales for such good prices. You could probably kit out your whole house for a few £100s if you use Facebook sales. When I'm talking kit out your whole house, I just mean, you know, your bed, maybe a chest of drawers, a TV unit, a sofa, that kind of thing. You can get some really good deals on Facebook sales. You could probably do the whole house for say 500, maybe 1,000 if you're pushing it. So that's one option. But when I was buying my furniture, I wanted everything new. That was just kind of what I wanted to do. And I'd say, it's hard to remember the specifics, but I'd probably say maybe around 2,000 to 3,000 to get the key basics. So I bought a TV that was £500, my bed was about £500, and then the furniture I bought wasn't particularly cheap furniture. So my dining table was a £200 dining table, I got chairs that were £80 each, my sofa was over £1,000. You can see how mine racked up to about the £3,000 mark, but you could easily get cheaper things. You don't have to spend £1,000 on a sofa or £200 on a dining table. They have some lovely dining tables in IKEA for literally £20–30. So yeah, I'd say around, if you want a really comfortable figure, then I'd say about £3,000 should be enough to get all your basic essential things, and that's including things like utensils in the kitchen as well, bowls, plates, all of that stuff. About £3,000 I'd say to have a really comfortable budget. But do remember, you can buy this stuff over time. You don't need to rush and buy it all at once. The next question is, how much of your leftover income after bills do you recommend saving? And then another one was, what percentage of income should be for guilt-free spending? So I kind of feel like this is a bit kind of similar. So it kind of is down to what your goal is. So when you've paid out for everything, so for example, when I was living at home with my parents, I had to pay rent, I had my phone contract, I had car finance, my fuel bill was really high because I had to travel quite far for work. I bought quite a lot of food, for example, all them kind of things that I had to pay out for every single month. I'm trying to think what else I had. That might have been everything, but my outgoings were still pretty high when I lived at home. And so obviously that was my core essential expenditure. That was fixed, it couldn't be changed. And after that, I allowed myself to have about £200 each month for me. And then I would save about 800, something like that a month. So I'd say I only gave myself about 20% after all my bills for myself, and then the rest I would save every single month. But it depends what income you're earning when you're saving. Obviously, if you're earning say £1,000 a month, that's going to be a little bit harder, but luckily I was earning a reasonable wage at that time, so I was able to do that. But it's kind of down to how quick you want to save, what you're saving for, how important it is to you to reach that saving goal. Because if you're not in a big rush, you don't need to be so strict on yourself and just have no money every single month and just feel miserable that you're working all the time and not enjoying yourself. But equally, if you have a goal and you're determined to get there really quickly, then it's kind of a little sacrifice you have to make. So review your situation. What are you saving for? How much do you need to save? How long is it realistically going to take you to save that? And each month you need to think, should I buy a new pair of shoes or should it be going into my bank account? Am I going to be happier getting my house 6 months earlier, or am I going to be happier having everything I want and delaying it by 6 months, a year? Another question I've had is, would a car on finance affect mortgage borrowing? And that's yes, again, that will affect mortgage borrowing. So the amount that it impacts it by kind of depends on the lender you go with when you're buying a house. Sometimes they will take the monthly payment and then multiply that out to determine how much is going to be taken off your maximum borrowing. And other times they might look at the loan and take that amount off. But to be fair, when you look at the monthly payment and they calculate it out, it roughly works out to be the same as your loan anyway. So look at your outstanding finance loan for your car, and that will pretty much be the figure that's taken off your mortgage borrowing, which can be quite significant. You know, in some cases it can be £10,000–20,000. So that's another thing to consider when you are buying a house. Is your car going to really negatively impact your mortgage? Because I had a BMW and that was worth quite a lot of money. It was really expensive each month, and I got rid of that and got a Fiat 500 so that I could save a lot more money and also borrow a lot more money as well when it came to getting my first property. So another good question is who to go to when wanting to buy a house. So I feel like this is a really good question because when I was buying a house, I didn't really know who to go to. So I feel like this is something I've been through, I've learned, and now I can share my experience with you guys. So if you're buying a new build, you have to go directly to the new build developers. So when I say a developer, that could be someone like Red Row, Persimmon Homes, Charles Church, Taylor Wimpey, any sort of new build developer. So you'll find these by Googling them or just literally driving around your local area, and you know, when you see the new build development, check out the name and then literally contact them. Give them a phone call, go down there to their sales office and see them and speak to them. And that is the starting point for a new build house. So you literally have a chat with them, they'll show you what's available. If there's something that you feel you may be able to buy, they will then often put you in touch with a mortgage broker. You don't always have to use this person, but they have someone they recommend, and it often works out a lot cheaper for you, or free in some cases, because mine was free if I used their professional contact. So that person will then run through all your income, expenditure, gather loads of documents from you, and then they'll get you the decision in principle to see if you can borrow enough for that house. Then they've approved you for the affordability check side of things. They'll get back in touch with the developers, let them know. They'll know that you're happy and able to proceed, and then that's basically it. They can then put you in touch with their solicitor contact, or you can find a solicitor, and the process goes from there. It will all tie up. They pretty much do all the work for you, and they'll just get in touch when they need something from you, such as documents, signing things, that kind of thing. So yeah, that's for a new build. In terms of a older house, so when you're looking for a second-hand property, you need to go onto, say, Rightmove, Zoopla, find a house that you're interested in, and then you contact the estate agent on there. So on there, it will always tell you who the estate agent is and who to phone. Contact them, register your interest, see if the property is available for viewing, for example. And again, if you really like it and you want to go ahead, ask them if they have a mortgage contact, or just simply Google mortgage broker in and then whatever your area is, and then find someone, and then they will start the mortgage process for you. And then again, you can find a solicitor, either Google solicitors in my area, get a couple of quotes. That's always good to do because every solicitor will charge differently, or ask the estate agent if they have a recommended solicitor. And again, that's basically the process of who to contact. How to get out of debt. So I have actually done a video on how to get out of debt, so check out my financial playlist for that video. I say I've done a video on that. I've done a video basically on credit cards and how to manage debt, that kind of thing. So that one will be really helpful for that question. How much do you save each month? So in terms of how much I save each month, I'm not going to say the figure because I don't really want to disclose my earnings on YouTube. But what I will say is every single penny I make from YouTube, be it brand collaborations or AdSense, every single penny I've ever made from YouTube, I have saved. I've not touched a penny of that, spent any of it. So that's a big chunk of my savings. And then out of my salary, I would say I probably save around 20 to 30% of it, I'd say, because a lot of it goes on my bills, my outgoings. So yeah, I'd say about 20 20 to 30% of my salary I save still, because I have got room to save after my bills each month. I say that right now I haven't, because of COVID and everything going on. My salary has been reduced, even though I am still working full time, which is kind of annoying. But other than that, I normally would save about 20-30% of my income each month after tax, after outgoings. So yeah, I save quite a lot each month actually. How old was you when you got your first job, and when did you start to save? So I was 16 when I got my first job, and I started to save when I was about 19, 20. Although I always saved. As soon as I got a job, I would save whenever I could, but it would be for things like buying a new car basically. So yeah, I didn't really save for long or for things that would be long term, but I did save as soon as I started getting my job, although a lot of my money would go on also like driving lessons and insurance and things like that. Do you regret living at home to save for a flat? How did you know you'd saved enough? So I'm guessing this is in the sense of, do I regret not moving out sooner? And absolutely not. I could have happily lived at home for a couple more years. I wasn't really in a huge rush to move out, and when I got my flat, if I'm honest, I didn't properly move in for about at least 6 months, because I was not in a rush. I was only there a few times a week. So yeah, that's basically my answer. I liked being at home. I was happy to do it, and my advice to anyone else is stay at home as long as you can. I know that kind of answer is a bit controversial, because some people would say you should move out because, and you know, let your parents do their own thing or whatever, but if your parents are happy for you to be at home, if you're contributing, if you're happy at home and it doesn't have a negative impact on anyone, then why not? Especially when you're young as well. There should not be any pressure at the young age of say 20 to have to move out and rent somewhere, because the likelihood is you're not going to be earning enough to save anything, and then you're never going to get on the property ladder. So if your circumstances mean that you have to move out, obviously then that's completely different. But if you're in a position where you're at home, you enjoy it, all of that kind of stuff, and your parents are happy with it, and you've got a good agreement with them, and what they're asking of you each month is reasonable, then I think staying at home is the best thing to do. And how did I know I'd saved enough? I only knew because I decided to use the help to buy equity loan route, and then I knew how much deposit I needed, and I'd luckily saved more than that. So that's basically how I found out, and that was after finding a property. So I hadn't even hit my savings goal. I went online, found a property, inquired, and then it literally kind of whirlwinded after that. It went so quick, and yeah, and when we went through all the affordability checks and the mortgage advisor spoke to me and all of that, we found out that my deposit that I'd saved was more than enough. How to get a mortgage single with a low income. So I'm going to be quite blunt here, because I don't feel like there's a good answer for this one. You kind of can't. Well, I say you can't, I'm going to caveat that. If you're looking to use a scheme like the Help to Buy shared ownership scheme, you might be able to, because you can buy a 25% share in a property as the minimum. So that is actually quite low, if you like. So say you're buying a 200 grand property, you might only need a mortgage of 50 grand and your income might be enough to cover that, which is great. So you can look into routes like that. But if you just want to get a house with a normal mortgage, no Help to Buy schemes, and you have a low income, unless you're living somewhere where properties are extremely cheap, it's very unlikely you're going to be able to do this. So when I got my place, I live in quite an expensive area, which is very annoying. My flat was £200,000, which is a lot of money for a one-bed flat, and I was earning a good wage. I'm going to be honest, I was earning a good wage when I got my mortgage, and I only just scraped and got it, and that was with the Help to Buy equity loan. So you know, it's very, very difficult. Unfortunately, it's so difficult for youngsters these days to get on the property ladder. So youngsters sound like an idiot, but yeah, it is hard. It is really, really hard. So you're going to need to look into different schemes, see what support's available to you, but also do your research, because you might find you don't want to do shared ownership. You might find it's not worth it, and you might want to save for longer, get more qualified at work, progress at work. And that is basically my biggest piece of advice I can give to anyone as well. Progress as much as you possibly can at work, because you need to use your young years to work hard and progress and get to a really good position, so that you set yourself up financially forever almost. You know, you get yourself to a really good job position. Obviously there's things like redundancies and all of that that are unforeseen and we can't determine, but as long as you work hard, you're determined, you get your exams, you get qualified, and you progress in whatever your chosen industry is, then I feel like you're setting yourself up to succeed, and you're setting yourself up to be able to buy the house that you want to buy. So maybe hold out a few extra years and get yourself into a good position in your workspace as well. I know it is hard, because certain jobs there is a income limit, and that's really, really frustrating. And I do feel for people that work absolutely so hard, yet their earning potential is capped, such as the NHS. You know, it's devastating that people in them job positions who probably work the hardest out of anyone in the UK, can't earn as much as a YouTuber, for example. That annoys me, but it's just the way of the world, unfortunately. And yeah, I don't know what to say on that one. It's just hard, isn't it? Just consider your options. Should you have a separate pension if you have a LISA? So a LISA is a lifetime ISA. So an ISA is a tax-free environment, and a lifetime ISA is basically a ISA that enables you to save. You get government uplift as well, which makes it more attractive, and you can use it for either buying a first house, or you can use it for retirement after the age of 60. So if you have a LISA, should you also have a pension? My answer is yes, just because a LISA you can access it at any time. Yes, there is a penalty for accessing it, which obviously makes it less attractive to access. However, you can access it. So in an emergency, you're probably going to access the money. A pension is locked away unless you are critically ill, for example, and there is a reason like that as to why the pension scheme is going to let you access them funds. They are locked away. They are literally locked away. You cannot access them until you reach retirement age, and currently that is 55 going up to 57 for your personal pension. So I think it's important to have a pension as well. Lock the money away so that you cannot access it. Someone has asked me where I put my savings. So as I said earlier in the video, I cannot tell you what saving account is best to use. All I can say is for a short-term saving plan, if you like if you're looking to save for the short term, under 5 years to buy a house, or whatever it may be, I think it should be somewhere relatively easy to access. So I just have mine in cash accounts basically, so I don't invest my money. I have it in a bank account or a ISA, that kind of account, and that's just because if you're looking to spend the money within a short time frame, you really should not be investing, because investments can go up and they can go down, and there's a chance of losing that money. So although yes, you could gain money in that time too, it probably isn't worth the risk. So it's probably better to look at your cash account options, and to do so you can just look on websites such as Money Supermarket. So I have so many questions asking me, what is the best cash account, what is the best interest rate, what bank should I use? I can't tell you that. You're going to have to go online and do the research yourself, and I am sorry, I wish I could help, but I'm not allowed because of the job I do. I just cannot give you those sort of answers because it is deemed advice. So if you want to find that out, literally just Google online best interest rates currently, and any sort of comparison website will come up, and then you'll literally have a table of all the best rates that are currently available, and then you can look to use them too. Live whilst young or save for a house. Now this is interesting. I'd say it's about the balance. So I lived when I was young, like from 16 to 19, 20-ish. I felt like I did what I wanted with my money. You know, I bought my cars, I would do what I want basically and buy a load of stuff I didn't need. And then when I got to 19, 20, I thought, right, now's the time to save and work really hard for a few years so I can get my property. So I was still young, but I'd had a few years whilst I first started work to enjoy myself. Now, in hindsight, I kind of wish I saved earlier, just so I could have put more money down on a property, but I enjoyed myself too. So I think it's about the balance. It's about what your goal is. How important is that to you versus a new item? Like I said earlier in the video, would you rather a handbag or would you rather buy a house? But when you are very, very young, you have to enjoy yourself too, because we never know what's around the corner. Now, I'm not the sort of person that thinks, well, anything could happen. You could be hit by a bus, so let's not bother saving. Let's do what we want. I'm not that sort of person at all, because you have to be reasonable, you have to be sensible, and you have to kind of live your life as if it's gonna carry on, you know. I hate going on down that sort of topic. It's a bit morbid, isn't it? But it is how a lot of people view it. They think, oh well, anything could happen, so I'm just gonna do what I want with my money and blow it. I don't think that's sensible at all. I think you need to have a plan, but it's about the balance. Barclay's Balance, NatWest Balance. Do you know that song? But yeah, so it is just about balancing it out. Maybe save half, spend half when you first start work and when you're young, so that you're still working really hard, you're saving a lot of your money, and then you're enjoying half of it as well. I think I'm going to stop here because I have been recording now for half an hour. I don't know how long this video will turn out, but I've been recording for a really long time and I don't want to bore you guys. So I'm going to wrap the video up here. I will film some more videos like this in the near future. Let me know if you enjoyed it in the comments down below. Hopefully you found it helpful, and until next time, have a good day. Make sure to keep your savings heads on and to keep achieving and reaching for your goals, because it's so important and you're going to be so proud of yourself if you do. And I shall see you guys in the next one. Actually, PS, as I said, if you want to watch any more finance videos, check out the playlist, because there's so many on there that I've covered, because I'm always asked the same question over and over and over, and it's often on videos I've already done. So do check that out as well, and I'll see you guys soon. Mwah!